How's it going, everyone? It's Sam. Today I want to talk to you about a crypto that is solving a lot of issues right now. And it provides an opportunity for new crypto projects. It also provides an opportunity to any altcoin holders out there and can make a huge difference. It can provide you with a resource, a tool in your toolbox that can change the game for you personally. And there are a couple different ways you can take advantage of it. I'll explain that as we go on. If you guys don't mind hitting the like button and subscribe button, I really appreciate that. It really helps out the channel. Also, this is a sponsored video, but they reached out and I feel like this is such a good opportunity that I wanted to bring it to your attention. Now, the massive crypto that we're going to compare this to is Compound. So if you haven't heard about it, it's an Ethereum token. The protocol itself is a series of decentralized interest rate markets that allow users to supply and borrow Ethereum tokens at variable interest rates. So why is this good? Well, there are a handful of different reasons. Maybe you see DeFi, like Anchor Protocol. I've talked about that a lot. Maybe you see that it pays 20% interest and you want the exposure to some of your altcoins because they pay a really high amount, but you also want to take advantage of some of this DeFi, right? So in traditional finance, you might think of it as, hey, I can get 8% or something in the stock market, and I have this home that I paid for, and that's at a 3% mortgage. Well, I could go get a mortgage on my home, and then I could put in the stock market, and it will increase more over time. Same thing with DeFi. If you can get 20% on DeFi, and the interest rate's 8 or 10%, some people want to do that. The other problem that some people have, or the other thinking, is that maybe they have to actually sell their crypto because something came up, let's say some big unexpected life event, but they still want exposure to crypto, but now they have to sell. But instead, now you could get a loan against your crypto and you could still have exposure to those crypto assets. Now you're not investing in DeFi or something like that, but instead of selling some of your crypto, you have that instead, which is why I want to talk to you about Fringe today. So Compound itself is a $1.24 billion market cap. So Fringe is the company that we're talking about today, or the project, and they are much smaller. So they are only about a $13.6 million market cap. Now they're available on Uniswap, Ascendex, and what they are doing is they're giving you access to some altcoins, like small altcoins. We know that it's easy to get access to something like Bitcoin or Ethereum and get loans against that, like even with BlockFi, right? But the problem is a lot of these platforms don't allow you to get access to smaller assets. So they're going to provide a variety of solutions for borrowing and lending on smaller altcoins. So this is very beneficial. There are a couple different ways that you can take advantage of this. So obviously, if you want to borrow, that's great. There is a position for lenders too that want to lend out some of the stablecoin. The other thing you can do is you can take your Fringe tokens and you can actually stake them to earn rewards from fees that are collected on the platform. So whether the platform grows over time, that's going to be great for some people that are staking because obviously the fees are going to go up. Or if there is some kind of bear market, the fact is you do get income, which will definitely help if we are headed on a downtrend. Also, they're providing temporary yield farming opportunities to encourage people to use their platform so you can make money that way. There are a couple different reasons to use this. One thing that I think is really cool is this could be huge for new projects, right? If a new project has, let's say, 10 or 20% treasury in their token, but they don't want to actually sell it for marketing and events and paying salaries and stuff like that, they can go and they can actually just go get a loan against their crypto. So this is fantastic because instead of creating selling pressure on the token when they're trying to get it lifted off, they can actually go get a loan, which is much easier for them to continue that momentum, right? You don't want to be selling multi-percentages of your cryptocurrency to try to increase exposure to it and to get people excited because the price is just going down as you're doing that. So that's an interesting opportunity. Then there are a couple different examples here that I ran through for people that are just individuals, right? So let's say you're an individual and you have this great yield farming opportunity like we talked about before, Anchor Protocol, let's say, or some other yield farming, and you can get 20%. And you're going to get charged an interest rate of 10%. Well, let's say you have $10,000 worth of altcoins and you want a loan for $2,500. Well, if you just held the crypto without the loan or anything like that for 10 years, and let's say it appreciates 15% a year, well, you'd make about $40,000 by the end of that time. But let's say that you do get that yield. You get the difference from the 20% to the 10%, and after that time, you'd have about $47,000, which is a 16% increase. I think of this as a great opportunity, but I also think that a lot of people will just get stuck where they have to sell their altcoin. And this is something that we don't want to wish on anyone, that they have some family emergency that comes up or some life emergency, but this happens, right? That's why we have things like home equity lines of credit and we have emergency funds. But let's say you have to dip into your altcoins and let's say you have to sell 25%. Well, if you held for 10 years and you got 15% appreciation, you would have about $30,000 after selling off that original 25%. But let's say you get a loan at 10%, well, you'd have about $34,000 after that 10-year period, which is a 12% increase. But it gets nutty. If you start increasing, let's say you actually get just the average Bitcoin appreciation each year. Let's say it goes up 50%, right? And instead of getting that 50%, you had to sell 25%. Well, you could have a huge difference, like a $140,000 difference or 32% difference after 10 years if this is quickly appreciating and you had to sell it, right? And then you have the issue of trying to get back in, but you can't get back in because it just keeps on going up in price. So this can make a huge difference compared to just being able to take a loan against your crypto. Now, of course, you do have to be careful, right? You don't want to take a large loan against it, then have it fall 10 or 20% and then get liquidated. That's something you have to be careful of whenever you're using leverage or loans. You might have to bring in more collateral if something like that were to happen. Now, they are going to assess these different cryptos based on the risk profile. They're going to look at various criteria to determine how much loan to value you can actually take out and, the interest rates and stuff like that. So you have to pay attention to that because obviously riskier cryptos are going to charge more in terms of the interest rate. They actually had 2 different audits. They said that they didn't differ much. They are starting to work through them and they think that they'll fix everything within the next couple weeks. They think all the auditing will be finished mid-February. After that, they should get the thumbs up to release the platform. Right now, they do have a testnet on their website. You can go check it out. But soon, they will actually have this platform up and running. So you can take advantage of the borrowing and lending and staking. Otherwise, you can go buy their cryptocurrency. If you think that it's going to go up in price, you can go buy their cryptocurrencies on those different platforms I listed earlier in the video. So as time goes on, it will probably be easier and easier to access Fringe too. You'll be able to get on more exchanges. But right now you really should be buying it on Uniswap or Sendex if you're trying to buy Fringe. Now, I will leave links to their Twitter where they give updates all the time, and I'll leave links to their website underneath the video. There's a Linktree link underneath the video where you can check out all that information. Now, I think this is a great opportunity first of all, for projects that want access to their treasuries, but also to altcoin holders that maybe have some more degen altcoins that want to take loans against them or just want some flexibility. I definitely think it's worth checking out. I think that when you compare it to other larger projects, it is at a severe discount, but it is very young. So there is more risk, but there's also more reward in times like this with newer projects. So definitely check that out. Thank you guys so much for watching. I do appreciate you hitting the like button and subscribe button, and I will see you in the next video. Thank you to Fringe for sponsoring this video. Bye.